Hello, Jessica Amir here for the Finance News Network. Joining me for a 2018 end of financial year update from Aus Tin Mining is CEO Peter Williams. Hello, Peter. Welcome back.
Thanks, Jessica.
FY2018 has been a very busy year for ANW. Just tell us about your achievements.
Jessica, it certainly has been a busy year. I think at Granville we commenced production, elevating us to producer status, and we've commenced construction as part of our Granville expansion. At Taronga, we obtained development approval for our Stage 1 project. At Mount Cobalt, we delivered some fantastic drilling results. And on the financial side, we repaid a funding package and put in place a new, larger facility on more attractive terms.
Thanks, Peter. Now to each of the projects. What have been some of the highlights for each Granville, Taronga and Mount Cobalt? And what are your plans for FY19?
I'll deal with each project in turn. So at Granville, I guess the highlights for us during the last year certainly have been that elevation to production status with our first shipment of concentrate via Praxis. So we were pleased with that. We've also been working very hard in terms of progressing all the regulatory requirements to allow us to commence expansion works, and which we've now starting with the construction of a new tailings dam. And we've also been installing new equipment in the processing plant and improving recovery. So certainly very busy going forward for the next half and the year ahead, equally as busy as we ramp up production at the mine. And start to evaluate the exploration targets to extend the life of mine. At Taronga, as I mentioned just before, we received development application approval for the Stage 1 project. So this is a really exciting project for us. This is our flagship project, and we're keen to get this into production. It's going to allow us, really importantly, to evaluate particularly some of the grade and see what some of the potential upside is with this project. So really for 2018, it's really been about getting that approval, so we're really pleased with that. Going forward, we've already started the process of addressing all the processes and plans that we'll need to do prior to the commencement of construction. But looking forward, we hope to have completed all the necessary civil works, completed EPC for the pilot plant, and be into production, hopefully by the end of this year. And finally, I guess from a project perspective, Mount Cobalt, which is located just north of Brisbane, or it's west of Gympie, in fact, we had an outstanding set of drilling results, which we announced back in January and February of this year. Some of the highlights were up to 0.32% cobalt over 25 metres, including an interval at 1.48% cobalt, 1.3% nickel. So absolutely great results. We've been spending a lot more time at Mount Cobalt. We're trying to spend more effort in understanding what the potential is around the periphery of the porphyry. And certainly we've been doing some 3D modelling. So going forward for 2019, it's going to be following up on all that drilling we've done. Ideally, we'd like to be drilling some of the deeper targets based on some of the magnetic anomalies that we've previously identified, and further explore, I guess, the periphery of the porphyry, looking for additional cobalt nickel mineralisation that might occur. So a busy 2018, but equally 2019 is looking very busy as well.
And how are your finances and strategy progressing?
In terms of finances, we'd actually put in place in June 2017 a funding package, which we actually were in a position to repay earlier this year. And we were fortunate that the provider of that facility came back to us earlier this year and offered a larger and more attractive funding package, which we took up. One of the particularly notable features there is a convertible standstill at 3.5 cents per share for a 10-month period. So very attractive for a company where we're at the moment. I guess from a funding or financial perspective, Granville we also expect will be contributing to cash flow this year. We estimate the cash costs at around sort of $17,000 per tonne of recovered tin. At current prices, that's a margin of sort of circa $9,000 a tonne, so something that we're looking to add to that. And I guess from a Taronga perspective, our expectation is that revenues that we generate for the stage 1 project will meet the capital and operating costs for the trial mine. So it should be a nil net cost to the company.
And lastly, what are the highlights and your expectations for the tin and cobalt markets?
Look, Cobalt is performing very well. It's up 65%. So look, absolutely fantastic, and lots of information out there in the marketplace for Cobalt. Perhaps for tin, what's really exciting is that Rio Tinto just recently nominated tin as the most impacted metal by new technology. There are applications that are being progressed at the moment, which you can see a doubling of tin consumption. So look, we're really excited about tin, and we think now's a good time to jump on the train.
Peter Williams, thank you so much.
Thanks, Jessica.